Hello friends, a very warm welcome to my channel. In today's video, we are going to discuss another unique company which is into the power generation sector. As we all know, this is a sunrise sector where the government is having very high targets of power generation in this decade, especially in the renewable space. And this company is specifically working towards the same aim along with the government of India. So this is a public sector enterprise called SJVN, and this company has very high growth targets that we will discuss in the coming slide. So if you're new to the channel, please do subscribe and hit the bell icon. And if you are not a part of a Telegram channel, do join today by clicking the link in the description. We discuss daily market commentary on a Telegram channel every morning, which will help you manage your portfolios much better. So this will be a flow of our presentation. We'll discuss the business model of SJVN in brief, then we'll look at the chart, how the stock has performed in the last few years. We'll discuss the main financial parameters of the company. We'll discuss why the stock price is running, rocketing. Then we'll discuss what is the outlook of the management, their growth plans. We'll discuss the valuations. We'll understand the risks of investing in business, and we'll try to form a view after understanding all these things. So SJVN is a company which is into electricity generation. So they generate electricity doing capex on their own. So their projects are their own projects, and they sell electricity to the public and private enterprises. So CPSE stands for Central Public Sector Enterprise. It's a Mini Ratna company, and it has won the award of most efficient and profitable Mini Ratna company recently. Mainly this company's power generation is into the hydro space, and now they are expanding into the renewable space as well. To speed up this expansion, they have formed a new subsidiary called SJVN Green Energy Limited. So the renewable energy capacity expansions they are doing under this subsidiary. Whenever they do any capex to establish any power plant, they enter into the power purchase agreements with different customers, whether it is a public sector enterprise or a private company. So they enter into long-term power purchase agreements. What happens to these agreements is for the next 10, 20, 30 years, there is an agreement between the customer and SJVN that they will purchase power from them. So based on that, they have the confidence of spending hundreds and thousands of crores in establishing the massive power production projects. So at present, this is their operational capacity. They have about 2000 megawatts of projects under operation, out of which majority of it is hydro power projects, roughly about 1912 of hydro, and the rest of solar and thermal and wind are very minuscule compared to the major one. But going forward, the company has plans in the next couple of decades to increase this capacity to almost 48,000 or almost 50,000 megawatts. And out of this, majority will also come from the renewable energy space. So they have plans to scale up the renewable energies capacities to almost 40% of the total capacity in the next couple of decades. If you look at the stock performance in the past, there was no growth in the company and it was a stagnant kind of a company. That's why the stock price was also stagnant for a lot of years. Now, if you see post-COVID, there has been a sudden jump in the share price and the stock has given massive returns. We'll discuss why this has happened in more details in the coming slide. If you look at the installed power generation capacity, it was around 2000 megawatts in the last many years, and that's why there was a stagnancy. And now going forward, in fact in FY23 also, if you observe, it's just about 2091. So there is not much rise in the power generation capacity at present. Then why is the stock price running so fast? When you look at the revenue is stagnant in the last 5 years. In the trailing 12 months also, it is almost somewhere around 2600 crores. EBITDA is also stagnant at somewhere around 1750 crores. In terms of margin profile, this company does very well, and they have very high margins of somewhere around 67% EBITDA at present, and normally it hovers around 75%. There was one exceptional quarter which led to a small dip in the margins recently. As this is a capex intensive business, their return ratios are very poor. They are generally in single digits, and the company has huge debt. Going forward, looking at their capacity expansion plans, this debt is going to increase. At present, as on September 2023 itself, they have about 17,000 crores of debt on their balance sheet, which comes to a debt equity ratio of 1.2. Going forward, there can be further increase in this if they don't efficiently manage their capital. Then what led to the stock price going up is the sector tailwinds, because this sector has been in the limelight, the power sector as well as the public sector undertakings. Both of the categories have performed very well in the last couple of years. Then the company has announced very aggressive growth plans, which we will discuss, and they are also winning the power purchase agreements for the growth plans which they have announced, which gives the investors an assurity that their projects are going to be constructed and the power is going to be sold to the already agreed customers. Now these are some recent announcements as examples I am sharing with you which the company has done. SJVN plans to develop 100 megawatt project for GUVNL, which is a solar project in India, and SJVN will build, construct, operate this project and sell the entire electricity to this organization. Then they have signed a power purchase agreement worth about 200 megawatts again in the solar space with UPCL. They have also got an agreement to form joint ventures, 4 joint ventures in India and Nepal. So these kind of announcements and developments are happening in the company in the recent couple of years. If you look at the capacity addition plans, right now in FY21 to 23, there was a stagnancy in the capacity of about 2000 megawatts. Now their vision is to extend this to up to 5000 megawatts by FY24 and to take this 5000 megawatts to almost 25,000 megawatts up to FY30 by the end of this decade. And from thereafter, they plan to even double this 25,000 megawatts to 50,000 megawatts, which is their long-term vision, up to FY40. So the next decade after FY30, they want to further double this 25,000 megawatts to 50,000 megawatts. So when some company announces this kind of capacity expansion plans, it is quite natural that their stock price will shoot up. That is what is happening in the case of SJVN. Now, if there are so aggressive growth plans announced by the company, then what stops from investors like you and me to buy this stock? Announcement is one thing, execution is another. So now to execute this growth plan of capacity additions, first thing is the company has to plan how much capex they have to do every year. Secondly, they also have to decide how they are going to arrange the funds to do this capex. The first can be through their free cash flows. So company has very good free cash flows because depreciation is not a cash outflow cost on the P&L, and they have already done capex in the past and they are generating healthy free cash flows. So they will use that, but at the same time that free cash flows will not be enough for the projects which the company has planned, such aggressive projects which the company has planned in the next couple of decades. So they will have to further raise funding in the form of debt. So in the last few years, the company has raised about 1000 crores in the form of bonds. They have also raised $500 million to ECBs and another 2000 crores to securitization of debt. Now going forward from FY23 to 30, how do they plan to raise the funds? They plan to raise about 7,500 to 8,000 crores by the way of securitization of their existing assets which they have created in the past. They plan to raise another 10,000 crore through debt. They will occasionally use bonds and ECBs whenever they required, and their internal accruals will also contribute. So looking at this, you will also observe that along with the capex, there are very aggressive debt raising plans by the company. So overall, the company feels that about 20-30% funding of this capex will be in the form of equity, and about 70 to 80% of the entire capacity addition funding will be through debt. And these will be the figures every year the company will be spending in the capex. In FY24, about 11,000 crores, then about 11,500 crores in FY25, 13,000 crores. So there will be a steady increase in the capex spend up to 17,000 crores in FY30. So to me at least, these numbers look very huge, and planning up to FY30 is quite optimistic, and the execution should be closely watched year after year. When you look at the valuation historically, as there was no growth in the company used to trade at single-digit earnings multiple. Post announcement of these capex plans, the valuations have drastically changed, and at present they are doing a profit of about 1000 crores and they are trading at somewhere around 45,000 crores of market cap, which comes to about 44 times the earnings multiple. So the market has already discounted the earnings of the next couple of years in the stock price. This is something which we have to notice. Now, what are the risks of investing in this company? It's a public sector undertaking where the government holds more than 75%. So there is the risk of OFS. Normally OFS is announced at a price lower than the present market price, and this is like a sword hanging over the head of the company, which will create some pressure on the stock price of the company. Second thing is, announcement of capex plans is one thing, execution is a second thing. So the execution of these capex plans have to be closely monitored by the investor community. To fuel this growth, the company will have to take huge debt. So taking of debt, servicing of debt is important. If any of the project fails, the company will not be able to pay the interest and may lead to further consequences. Whatever projects the company is planning to execute, there should be power purchase agreements for that. If they don't have power purchase agreements, then after the completion of the project, whom will they sell the power to? So it is important to closely watch whether the company is getting sufficient power purchase agreements or the customers to purchase the power which they produce. Next is the capacity utilization. So whatever power projects they are constructing, they are producing electricity that has to be utilized to the maximum capacity to recover the fixed cost of that project and the investment made in constructing that project. The maximum capacity at present is through the hydropower, and hydropower is prone to natural calamities like floods, etc., which has happened in the past with the company, which will lead to lower power production and lower revenue in such time. The government is quite positive at present, but if at all there are change in the government policies that can impact the business of the company, then the company is talking about big numbers in terms of power production. But actually, whether the industries in India require such amount of power in the next few years itself is a question in my mind, because SJVN itself is not the lone power producer. There will be other public and private sector enterprises who are also into the production of power. So such consumption should also get generated in India. Otherwise, it may lead to idle capacities in these companies, leading to risk of repayment of their debt and interest amount. So after discussing the business of the company, their growth plans, their financial parameters, the risks, what is our view on the company? If you're already holding the stock from lower levels, you should continue to hold, because the company is announcing very aggressive growth plans and the execution will be seen in the next 2-3 years. You cannot expect a power project to get completed within a few months and the revenue to flow within a few months. So hold it for a couple of years and see whether the company is moving in that direction or not. Every year closely monitor it. And if you want to take a fresh position in the stock, then you shouldn't hurry up. You should accumulate in a staggered manner depending on how the company is executing. And do keep in mind that the re-rating in terms of valuation is already over, and if at all the company fails to deliver what they promised, then the de-rating also can be huge as the re-rating. So you have to be quick to get out of the stock if at all the execution fails. Please note that this is not a stock recommendation. We are only discussing this as a case study for educational purpose. So that's about SJVN. I have created a very crisp video highlighting only the important points here. If you like the video, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the name of the stock in the comment section. Do join our Telegram channel using the link in the description. Thank you for watching and have a wonderful day.